welcome to Alberta Innovate's second Capital Access webinar, Raising Capital in Alberta. My name is Karen Garth. I'm a communications manager here at Alberta Innovates. Before I go through some housekeeping, I'd like to start things off today with a land acknowledgement. We acknowledge the many First Nations, Métis, and Inuit who have lived in and cared for these lands for generations. We are grateful for the traditional knowledge keepers and elders who are still with us today and those who have gone before us. Alberta Innovates respectfully acknowledges that we are situated on traditional territory of the Treaty 6, Treaty 7, and Treaty 8 First Nations, home to Métis settlements, the Métis Nation of Alberta, comprising Districts 5 and 6 in Calgary, 8 in Devon, 9 and 10 in Edmonton, and District 12 in Vegreville, within the historical Northwest Métis homeland. We respect the histories, languages, and cultures of First Nations, Métis, and Inuit, whose presence continues to enrich our vibrant community. Before I hand things over to Doug, your host for today's session, I'd like to take care of a few housekeeping items. Today's session will consist of a presentation, followed by time for questions at the end. Please feel free to use the Q&A function to ask your questions throughout the presentation, but just remember to add some context so when we come back at the end, we're able to answer the question as fully as possible. We will try to get through as many of the questions as we can in the time that we have. And just a reminder that I'll be popping a link to a short survey into the chat at the end of the session. Please take a minute or two to fill it out if you can, so we can continue to make sure we give you the most useful webinars possible. Thanks and enjoy the webinar. I'll pass it over to Doug.
Wonderful. Thank you, Karen. Very excited to be able to be with you today. My name is Doug Holt. I'm the Associate Vice President of Capital Development for Alberta Innovates. And in that role, what we're trying to do is we're trying to fundamentally make it easier for entrepreneurs to raise capital so that they can continue to flourish and grow their businesses. We also work closely with fund managers so that we can deepen the capital pool in Alberta by making it easier for fund managers to grow their AUM, their assets under management. And we work with investors, helping them to understand the ins and outs of investing and how to access different angel groups and who to work with and how to move forward in that capacity so that overall we can grow the tech ecosystem in Alberta. Today, it's a pleasure that we're going to get the opportunity to hear from Tonya Fleming, who's the Manager of Private Markets and Innovation with the Alberta Securities Commission. Tonya and we liaise quite regularly to talk about some of the challenges that the ASC sees in the market around raising capital and around different issues. So what we're trying to do is create a forum and a venue through which everyone can learn and understand a little bit more about where the potential challenges and opportunities lie. This is our second webinar, and the first one was on valuation. And so just watch on your LinkedIn, because we're going to continue to offer these types of webinars throughout the year and trying to create really relevant topics for entrepreneurs and investors to come alongside us and so we can all learn together and grow this ecosystem together. So without further ado, oh, by the way, I will say that there will be a period of Q&A and opportunity for questions that we will be monitoring, and we'll be able to come back at the end of the presentation, and Tonya and I will go through those and talk about that. So please, if you have questions, put those in the chat and we'll do our very best to get to them. So without further ado, Tonya, I'll hand it over to you.
Awesome. Thank you very much, Doug. Yeah, thanks. And I'm pleased to be here today. As Doug said, I really follow the work that Alberta Innovates is doing because building out our tech ecosystem is so important in Alberta. Today, we're going to talk about capital raising, and we'll focus on the small business space. So this is as you are growing your business and you're looking to start bringing in money from other people. This is when this is relevant to you. Now, there's no possible way that you will remember all of this that we're going to talk about today. And we're really, I'm going to hit kind of the high points, but there are a few things that you will absolutely take away. One is, of course, what is the Alberta Securities Commission? What is it that we actually do? We do have a team that I lead, which is called our Private Market and Innovation team. And we regularly engage with businesses to really help people navigate that capital raising process. So this is a genuine, like, this is a resource, and there is no cost to it. So you'll often find me at different events that that small businesses and entrepreneurs are at. So feel free always to just pull me aside and ask questions. Or if you're at that stage where you're ready to embark on that capital raising process, and you want just, you know, kind of a little one-on-one, we can meet for coffee and I can kind of run you through it. You'll still need a lawyer as you are going through this process, but the more you understand, the better position you'll be in to provide instructions to your lawyer and really just understand what's going on behind the scenes. What are all of those documents that you're asking your investors to sign? So it'll give you, it gives you a bit of a framework. And again, you won't remember it all. There's lots of things we'll talk about today, but hopefully you come away from this remembering, okay, there are rules. They're technical, and you can come back to them when the time comes. So a little bit about the Alberta Securities Commission, which is known as the ASC. You'll see our brand around, especially around Alberta. We do try to be at a number of events that are in that innovation tech space. So you'll see us there. So we are the regulatory agency that's responsible for looking after the securities laws. We have an enforcement division that is there to really protect investors from potentially fraudulent behavior that's going on in the market. And we regulate the publicly traded companies, so companies that are traded on a stock exchange, making sure that the continuous disclosure obligations they have are being followed appropriately. But we also regulate private companies. And that's something that a lot of people don't realize, is that private companies, so companies that are not traded on a stock exchange, we also regulate those companies as well. So the securities piece of it is when a company is raising capital, so they're bringing in money from other people and they're issuing securities. That could be shares, it could be debt, but someone is investing in your business with the expectation of making money. So this isn't a charitable endeavor. You have a business and you ultimately are trying to grow it and make a profit off of it. So people are investing in you and in your business with the expectation of a return. Everything flows from a piece of legislation, which is the Alberta Securities Act and its regulations. And fundamentally, that is to, we have a role to protect investors from improper, misleading, or any fraudulent practices. We require companies to provide investors with timely information so that people can make informed investment decisions. And then we also require those who are involved in that industry, so they're involved in selling securities. This could be a broker. This is someone who's often in the middle between a company and the investors, that those people need to be registered and that they conduct themselves professionally and ethically. So these are sort of the overall, this is the overall role of the Securities Commission and why it matters. In Canada, unlike the US, securities law is a matter of provincial jurisdiction. So every province will have its own Securities Act. But we do work together. So we have what's called the CSA. It's a sort of an umbrella organization where all of the provinces get together. We sit on various committees whenever we are looking at developing policy, securities law policy, or new law. And we do have what's called our passport system, so that the company is able to, you don't have to engage with every single province in which you're trying to raise money. You'll have a principal regulator. So if you're an Alberta company, you have a head office here in Alberta, the ASC would be your principal regulator, just to make it a little bit easier for you. As people on this call will know, Alberta is a really important capital market. Oil and gas pipeline really dominates our capital market here, and there's a lot of that you'll see, especially in the public company. But we also have a lot of what we call emerging industries, and that is where that we see that innovation really taking place. So there's lots happening in various forms of tech. And last year we looked at, almost $4 billion was raised in those emerging industries. So every year we publish what's called the Alberta Capital Market Report. It's available on our website, and it is a very data focused report where you can see a lot of information about what's happening in capital markets in Alberta. The private market is sort of that umbrella term. Basically, it's for investment that's not available in private markets. So you might hear about venture capital or private equity firms. Those firms are operating in the private markets. And at the ASC, we really take a lot of pride in trying to understand and support our capital markets. So a lot of what I do in my role is engagement and outreach and talking to people and talking to companies and finding out what are their challenges, and how can we support them, and really keeping in mind that perspective whenever we are looking at developing law or we are amending law over time. So feedback is crucial, and we're interested in hearing it. It really helps to shape things. So this is the sort of takeaway. There are, if you can sort of remember, you'll get this sense of what is the framework of securities law. So there are two pillars really that kind of support securities law. And this is an easy thing to remember, but these are the two most important pillars. And what we'll be talking about today is the prospectus requirement and then the exemptions from that requirement, because that's that capital raising piece of it. But the two pillars are the registration requirement, which is the making sure that people who are in the business of selling and advising in securities are registered and are conducting themselves professionally. And then the other piece of it is the prospectus requirement or the disclosure requirement. And those two kind of fundamental pillars come from the Securities Act. So they come from legislation. Now, small businesses and venture capital end up using exemptions and carve-outs from those two requirements. So with a public company, there is a prospectus. Any company that's been trading on a stock exchange, they will have issued a prospectus. But for private companies, they're actually using an exemption from the prospectus requirement in order to raise capital. And I'll talk about why. So the reason we have this prospectus requirement, of course, is so that investors have disclosure. So they have information that's timely and it is accurate. They have information on which they can base an investment decision. And the Act requires them to file a prospectus in order to issue those securities. It's a comprehensive disclosure document. It's quite expensive and time consuming to prepare a prospectus. And so we have this exemption from we have many exemptions actually from the prospectus requirement that smaller businesses will use when they are raising capital. So that's the starting point, is you have to issue a prospectus, or you can use a prospectus exemption. And that's what we're going to focus on today. So why do we have prospectus exemptions? It's very expensive to file a prospectus. And if you're a small business and you're not seeking to raise a lot of money, then the costs of doing a prospectus will just outweigh it's too much. So we have prospectus exemptions as an alternative. So we're looking to balance still the investor protection, but also the economic efficiency, because we want companies to be able to raise capital. So there are many prospectus exemptions available. And when you're looking at, okay, what exemptions would be relevant to me, you're looking at what are the needs of your business, how much money are you trying to raise, who are your investors, and that's often something that a securities lawyer will advise you in. What exemption would be relevant to you? What would work for your business? So you'll often hear prospectus exempt share offerings be called an exempt market distribution or a private placement. So that's what those terms mean. They're when a business is issuing securities and they're making use of one of these prospectus exemptions. And you can see over time, so this is just a chart of how much money was raised in the exempt market. by companies that had a head office here in Alberta. So when we talk about RI, that means reporting issuer or a public company, and then non-RI would be a private company, so a non-reporting issuer. We have prospectus exemptions, one of which is because it's so expensive to raise money using a prospectus. And so we have these, what are the rationales where we would have companies be able to raise money outside of that regime? So if your investors are, for example, rich enough to withstand the loss, they're in a position of trust with a principal, so a director or officer of the company, there might be something like some light disclosure available. It's not the level of disclosure you'd see in a prospectus, but there is information, written information that's delivered to shareholders that would be able to assist them in making an investment decision, or perhaps a very small amount of money is at risk. So these prospectus exemptions, they are technical, they're narrow, and the obligation is on the business to make sure that they're following the rules of that particular exemption or multiple exemptions that they're using. So the obligation for compliance is always on the business. It's not on the investor. So that's a good thing to remember if you're an investor. If you're investing money in a business, you're not in trouble if things aren't done quite properly. It's the obligation of the business. So that's typically why the businesses will use a securities lawyer to help them do these sort of share issuances. We'll talk about some of the commonly used prospectus exemptions. By far, the most commonly used exemption is called the accredited investor exemption. So you might have heard of like angel investors who've invested in businesses. So individuals who are, the legal definition for them would be accredited investor. And we'll go into each of these in a little bit more detail, just so that you have a bit of an overview of what these things mean. Private issuer, friends and family, that's another one you'll hear early on. You'll hear, oh, a company did a friends and family round. So they were using that particular exemption. And you can use the exemptions together. So you don't need to choose and say, okay, I can only pick one. It has to do with the amount of money the business is raising and then who the investors are. So you may well have, in my example here, 4 accredited investors and 7 people who fit into the friends and family category. So the exemptions can be combined. The private issuer exemption, I used to actually have this slide later on in my deck, but then I realized that it was making people worry, because as I was going through the exemptions, companies that had raised money, they were thinking, oh no, I don't know if I did those things. I don't know if I'm compliant. And the private issuer exemption is one that I kind of call the accidental compliance exemption. So for lots of companies that have raised money and they didn't happen to actually be aware of these rules, they may well be actually compliant kind of by accident. So the private issuer exemption is one where the company is a private company, so they're not a reporting issuer, they're not an investment fund, and they're small, so they don't have more than 50 shareholders, but that number doesn't include employees. So if the employees own shares in the business, those people are excluded from that 50 number. And the business has only ever sold securities to a fairly small group of people. So this would be, the directors, the officers, the founders, and then family members of those individuals, to employees, to accredited investors. So we'll talk a little bit more about the details of what that means in terms of being an accredited investor. Companies that are majority owned by the above, but just generally, they have not sold securities to the public. So that is a defining feature of the private issuer exemption. So for people that have small companies and you have had your family members invest, employees have invested, you're probably compliant thanks to this private issuer exemption. And there's nothing required. So there's no filings with the Securities Commission with this particular exemption. There's not a prescribed offering document. So again, even though you didn't even know there were rules you had to comply with, you may well have complied thanks to this particular exemption. The accredited investor exemption is, as I said, the most common way that that businesses do raise money privately. So this is an exemption where the company can issue shares, but also shareholders can sell to each other. So if you've bought shares in a private company, your resale options are relatively limited, but you can sell your shares to someone else, another person who is an accredited investor. So, this is like the financial institutions, like kind of the big guys. But if you look down just to the what is an individual? So who is an individual that's an accredited investor? There's some tests here. So this is net realizable financial assets. So that's kind of securities that are liquid, greater than $1 million. Or a net income that's greater than $200,000 or $300,000 with a spouse. When we look back, the look back is 2 years back and expected to continue. Or an individual or a company that has net assets that are greater than $5 million, and that amount can include non-financial assets like land or a house or things like that. So these are individuals that we would put in that category of saying they're wealthy enough to withstand the loss. So they are able to invest in a business. They're able to trade shares amongst each other. There is no prescribed offering document. So often investors will ask a business for a document that describes the business and provides disclosure, but there's nothing that's required by law. So the disclosure document can be whatever the company puts together. It can't obviously be misleading or fraudulent, but it is not, there's no required filing with the Securities Commission. There is, however, a risk acknowledgement form that's required. So the business needs to have their shareholder fill out this risk acknowledgement before they accept their money for those shares. And that is a warning, because it is risky. Small business, private businesses are risky. There are a number of businesses that that fail. And so we want to be sure that people understand this before they invest. This form needs to be filled out by the shareholder. So if you're the entrepreneur that's raising business, don't fill this form out yourself and then just say, oh, just sign here. Like, this is a form that needs to be filled out by the shareholder. And there is when you're filing this, or sorry, you don't have to file this form, but you do have to report the money that's raised this way. So again, unless the company is a private issuer. So if they still fit in the definition of a private issuer, they don't need to make a filing, but otherwise they can use this exemption. So say you have 75 shareholders, you're no longer a private issuer, you're raising money from accredited investors. There is a filing that is that's due, and you make that on a system we call CDR Plus, and there's a small fee that's associated with making that filing. The friends, family, and business associates. This is one, well, you'll hear that a company did a friends and family round, and that is people that fit within this particular securities law exemption. So these are specified family members, parents, grandparents, kids, grandkids, things like that. Close personal friends, close business associates of a director, an officer, or a control person of the business. And there's not a bright line test of what close means. So that's a really common question of what does that actually mean? Because that's what it says, and it's not, the word close isn't defined. So what does it mean? So we look at, in terms of what does that mean, we would look at case law, we'd look at decisions that have come out of hearings to kind of, get a sense of it. But really, is this someone that you know well enough, you trust them? Could you ask them for information? They'll give it to you. It's a relationship of trust. So it's not, you can't just be members. You can't just go to the same church. You need to have an actual relationship. Like, do you have that person's number in your phone? Like, is that person genuinely a friend or a business associate? Is this someone you worked with for a long enough amount of time that a reasonable third party would say, yeah, they're a close business associate. So keep in mind that reasonableness test rather than looking for a bright line, defined term in terms of close. When a company is using this particular exemption, you can't be paying somebody to help you raise money. And of course, this makes sense, because why would you need to pay someone to help you find your friends, family, and close business associates? So that's one of the things that if we happen to see that the company used the close friends and family exemption, but then they paid somebody a finder's fee or commission to help them raise that money, then that would flag us to look a little closer, because you don't have to pay somebody to get your friends and family to invest in your business. And again, you can provide information. The shareholders might be looking for information about the business, but there's not a prescribed form that you have to fill out. And nothing has to be filed with the ASC. So even if you're providing a written document or a slide deck to your investors describing the business, you don't have to provide that document to us. But again, if the company isn't a private issuer and they're using this exemption, then they would in fact just be filing a report on SEDAR+, and that's where we would. That's the filing where we would look for, did they actually pay someone in connection with a friends and family round that would trigger us to say, not sure that this is quite right. You may also have heard of the offering memorandum exemption. I won't go into the details here. This exemption tends to be used by companies that are a little more established, rather than a small business per se. And one of the reasons is that once you with the offering memorandum exemption, you do have to provide audited financial statements to your investors, and you must continue to provide those audited financial statements. So you wouldn't use this if you were just a very small business. You might not be able to afford audited financial statements at that stage, and you might not want to take on the obligation of promising that you will provide audited financial statements as an ongoing business. This exemption, though, we do see it used a lot actually in the real estate area, where real estate is you're raising money via for a real estate investment. So some very established developers will use the offering memorandum on a regular basis. And to the extent that someone is what we call an eligible investor and a dealer is involved in that deal, then that person can invest up to $100,000. And an eligible investor is a lower category than lower financial threshold than we see with an accredited investor. So this is looking at $400,000 in net assets alone or with a spouse, or $75,000 in income, or $125,000 with a spouse. So at a lower level than with the accredited investor definition. A minimum amount definition is another exemption that's often used. So this is when you have a business that is another business that is buying shares of your company. So this exemption can't be used with individuals, but it can be used with companies or partnerships. So if they're investing $150,000 at one time and on their own behalf, then this exemption is available. Another exemption that people are quite interested in and has been used really a lot lately. So we see filings like at least every week. There's a number of startup crowdfunding filings that are made. So I know this exemption is of interest because a lot of businesses are using it. This is when the securities are distributed through an online funding portal. So there's a couple that people might be familiar with. Front Funder is out of BC. Equivesto is out of Ontario. And those are two quite large crowdfunding portals. Alberta just launched its first, Go Alberta just launched its crowdfunding portal, and that's Alberta's first portal. One of the things I will say with crowdfunding is just be really, really careful to check to be sure that the portal is legitimate. Because the way that it's set up is that you will put in your credit card information or your banking information, and then the money goes to the portal. The portal holds the money until the transaction is closed. So the money has been, a certain amount of money has been raised, things like this. And then the portal then gives the money to the company. But if you happen to have the very bad luck of doing that with a portal that is not registered, that is not legit, it's fraudulent, then your money goes in and that's just the end of it. So we have Alberta Securities Commission has a website called Check First. And if you go to the Check First website, you will see there's a red button there. It says check registration. Click, click, click a few more times, and you can put in the name of the portal, and then you can check to see either whether it is a registered portal or it's operating under an exemption from or a carve out from registration. So we do allow these smaller portals to operate, but they have to have gone through a process with us so that we verify that it's the people that are operating them, they do not have a criminal past, like they're legit people, and that your money is not going to just disappear into the internet. So, you know, before you put any money into crowdfunding, or if you're a business and you're looking to use a crowdfunding portal to help you raise money, just check and be sure it's legit. Because this is just such an easy area for a fraudster to get a lot of money. With crowdfunding, the maximum that can be raised is 1.5 million annually, and it's small amounts of money. So this is when I was saying earlier that one of the rationales for why do we have prospectus exemptions is that only a small amount of money is at risk. This is an example of that. So in crowdfunding, you can get investment from the public. So this does not need to be your friends, family, and business associate. This does not need to be people who meet a definition of an eligible investor or an accredited investor. This just is anyone. Because it's a small amount of money. So people can invest up to $2,500, anyone. And if there's a registered dealer involved, then that amount is up to $10,000. So for example, FrontFunder and Equivesto are registered platforms. So there's a registered dealer that's operating that platform. So there's a $10,000 limit when you're investing through those two platforms. There is an offering document that must be prepared. So it's that prospectus light disclosure. So that's information about the business. And that document does have to be filed with the ASC, and there has to be a withdrawal rate. So if people like felt pressured and invested and then slept on it and changed their mind, the platform has to give the money back. So that's why the platform, that's one of the reasons the platform is holding the money in the interim before it turns it over to the company. And it can only be open for a 90-day period. And if the minimum amount isn't raised, then the money has to be returned. So again, you can see why there's obligations on the platform. In that intermediary period, the platform's holding the money and may in fact have to return it to the investors. So there is a risk acknowledgement that has to be signed. The offering document is filed, and then there's a report of exempt distribution that's filed. So we see those happening, and you know, we've been looking at them with interest to see what's how much is being raised in Alberta, where money is being raised, where are the companies. This is one that's definitely picking up a lot of interest in the province. We do also have a couple Alberta specific initiatives that I'll mention. And this is where these are not national. So if you are looking to raise money across the entire company, these exemptions would not work for you. But if you are looking to raise money, if you're an Alberta business and you're looking to raise money from people in Alberta, or in fact, these two are actually harmonized with Saskatchewan. So your investors are in Alberta or Saskatchewan, then these two would be of interest and use to you. One is the self-certified investor prospectus exemption. Now, I will say that this is one that currently Ontario has their own version of this, and then Alberta and Saskatchewan have their own version of this, and they don't work together. They're not playing well together. So this is one where behind the scenes, there's some work happening in, to try to harmonize this so that it's much more useful when things are harmonized across the country, and especially in Ontario, which is a large, Alberta and Ontario, these are large jurisdictions. It would be helpful if this exemption was in fact harmonized. But this is an exemption that's really of use for your investors that don't yet meet the definition of an accredited investor, but they do have financial knowledge. So like I'll often say, these are people with the letters behind their name, but a CPA, a CFA, an MBA, but they're people who have a certain level of financial acumen. They are certifying that they have that financial acumen. So the business doesn't have to go and check with the university. Did they actually graduate with an MBA? The business is allowed to rely on the certification from the investor that in fact this is true. And the individual is therefore able to invest in the business, even though they might not be, they don't fit within the friends and family definition, for example. They don't fit within, they're not an accredited investor, but they want to invest, they're interested in investing, and they're, people who do demonstrate that level of financial acumen. So this has been an interesting one, and I think as interest in this exemption grows, we've seen it a lot we've seen a lot of use actually or a fair amount of use in Ontario, because Ontario requires reporting. So every time this is used, there has to be a filing made. So Ontario's been collecting data on it. We haven't, so we don't know that we don't have data on usage in Alberta, but Ontario certainly does have that data. So anyway, an interesting exemption. And another one that we have in Alberta that's harmonized with Saskatchewan is called our small business financing exemption. So this is where a business is raising up to a $5 million limit over its lifetime. And they are in fact able to raise money from the public. So again, this is there's not very many exemptions that allow a business to raise money from the public. So crowdfunding is an example of one, small business financing is another example. So there is a specified offering document that has to be filled out and a risk acknowledgement. The offering document, this particular offering document is interesting because on our website, we actually have a fillable form. So this is one where a business can do it themselves. Again, you're still going to probably need a lawyer to help you facilitate your transaction, but in terms of reducing your legal costs, if you can fill in this offering document yourself, that's an area where you can in fact save some money. So there's disclosure that's provided to the investors. There is a maximum amount, obviously, that a business can raise. And there's two tiers here. So the one is if they're raising up to 1.5 million in a 12-month period, then there's no financial statements that are required to be provided. But investors can only invest relatively small amounts of money. And then tier 2 is when financial statements are provided. But in this case, the financial statements, they could be reviewed as opposed to audited. So that's something, again, to the extent that an accountant is involved, there's a different standard when it's a review standard versus an audited standard, and the cost of preparation is quite a bit lower. So again, this is why this particular exemption is of interest to smaller businesses, and investors can invest a bit more. So why do we have these limits? I mean, a big part of it is just making sure that people are not investing too much money. So there's been a policy decision made to allow this prospectus exemption where a business can raise money from the public, but relatively small amounts of money are at risk. If there was a dealer involved, an and that gets into kind of the details of the exemption. But if there's a registered dealer involved, then that dealer is involved in doing a suitability assessment. So is this a suitable investment for this particular person? How does this fit into this person's portfolio? And we have higher limits when there's a dealer involved because there's that additional level of protection. Just a couple slides on compliance. I mentioned this before, but the obligation is on the business. It's not on the investors. So if you're investing, don't worry that you're ever going to get in trouble if these rules weren't followed. That obligation is on the business, not on the investor. And the business has an obligation to take steps to make sure that the technical details of the exemption are in fact followed. Sometimes we see some issues, people forget, they don't know that they had to file certain documents, so they're filed late or not at all. Sometimes it's later, like 6 months or a year later, a business is looking to raise money again, for example, and maybe they're using a lawyer this time, a securities lawyer, and maybe they didn't use a securities lawyer the first time, and now the lawyer realizes, oh dear, you actually should have filed this and you didn't. So, these things happen, and contact us and, we'll get it filed. Sometimes there's a relatively small fine that the business has to pay, but it's got to get cleaned up at some point or another. So that's another issue that we see. Sometimes people say, oh, my purchaser meets this exemption, but they didn't, like things like that. These are some of the compliance issues. And again, we have all kinds of information that you can find on the website that details these things in a lot more detail. But again, that's the kind of stuff that if you're working with a securities lawyer, they'll be aware and they'll be able to help you not go offside on some of this stuff. And then I did mention this with almost all of our exemptions. Most of the time they're subject to resale exemptions. So if you're investing in a public company, the first time those shares go out, like in an IPO, it's a 4-month hold. But with a private company, it's indefinite. So when you buy shares of a private company, you can't sell them unless there's a prospectus exemption that's available to you. So that's why private companies are often higher risk. There's a lot less liquidity here. So once you've bought those shares, they're not easy to resell. And you have to comply with the laws of the jurisdiction, both where you are and where your shareholders are. So again, if you're raising money across the country, that's another reason why it is great to have a securities lawyer involved so that they can be sure that you're not just following the rules of Alberta, but also, BC or wherever else. And many of these exemptions are harmonized, so they're the same across the country, but sometimes they're not. And sometimes there's like little differences here and there. So if you are working with a lawyer, they will be able to help you navigate some of that stuff. And then just a mention of our enforcement division and our whistleblower program. So, a big part of capital markets in Alberta is having a capital market that people feel comfortable investing in, that they're not scared that their money is just going in and that's it. And they see of it, there's going to be there's fraudsters involved and scammers, things like that. We do know that there is a lot of fraud. There's of course fraud. There's always fraud that happens. And that is what our enforcement division does, is they try to shut that down, detect, disrupt, investigate, and prosecute so that the people that are the fraudsters get shut down and aren't able to, to have more people fall victim to it. And that's where you come in. A huge amount of this, we find out about it from complaints or from people contacting us and saying, this happened to me, this happened to my mom, or I saw something and this doesn't feel right to me. It feels a bit like a Ponzi scheme or something. Could you look into it? And this is what this team at the ASC does. So if you do come across something that doesn't feel right, you don't have to investigate it and be certain. If you're at the point where you're like, ugh, I just don't know, please contact us and let people here who do this professionally have a look at it, and if it is in fact a fraud, then they will shut it down. So that's it for me. We'll open it. I'll turn it back over to Doug. But the one thing I did want to mention again is we will help you. So to the extent you are a small business who's looking to raise capital and you need a bit of guidance, we're here, and you can reach out and we will have a telephone conversation with you or a coffee, and just give you a bit of guidance as you're going through the process.
Tonya, that was absolutely great. Thank you so much for doing that. There was a ton of information in there for folks to digest. And one thing I will say is Tonya and her team do a great job of making themselves to be available to you as investors and as entrepreneurs. They are they're extremely accessible, and that's one of the great things about working with the ASC that I've found is just how accessible this team is. They really want to make it easy and transparent to operate in the market. And as Tonya also said, they have their enforcement team, which makes it safe to operate in the market. So thanks again. We've got a couple of questions. I'll just start here and look at the chat that we've got going on. One was around understanding what specifically is a timely manner for reporting, and does one need to include a reporting time frame when they issue shares as an Alberta corporation? Like, would once a year be acceptable, or what's the standard?
Yeah, so if you're a public company, then there are very well-defined timelines for disclosure, but with a private company, it's typically before the shares are issued. So if you are using an exemption that has a required disclosure document, then you have to provide that document to shareholders before they invest in your company. And after that, with most of the exemptions, and I'll say with the exception of the offering memorandum exemption, where there is an obligation, annual obligation that continues, most of the time it's up to the investors. So the investors will say, they'll often have a contractual obligation that's outside of securities law, where they'll commit. They'll ask the business to commit. But that is certainly one of the things we hear in terms of getting, like, you're always looking for follow-on investment, or you're looking to grow in the future. And so if you just go silent on your investors, you put that disclosure document out, you get their money, and then they don't hear from you again, pretty unlikely that they're going to continue to invest in your company. So that would go to like best practice of how often you should communicate with your investors. And guess what? Investors like transparency. They like to know.
Totally. There was a question here around just getting clarity. Can governments, municipalities, or crown corporations, are they allowed to hold equity in private companies from the ASC's perspective?
Yes.
Yeah. Thought we'd get clarity there. And then there's been a couple of questions around, can I use a friends and family exemption and also a hybrid of paying for introductions? How do you approach those situations?
Yeah, exactly. So in the filing that is actually made, you will say, I had 5 friends and family, and then I had 10 accredited investors. And so in that filing, if we see, yes, you paid someone to help you with those bring in those investments, then we're going to assume that was to bring in those accredited investors and not the friends and family. But we may reach out and ask you. So it's not uncommon to get to have a communication from the ASC where we're asking a question about your fundraising efforts, and that would be an example where we would be clarifying that the money you paid was associated with the accredited investors and not, in fact, with your friends and family.
Okay.
Who hopefully you don't have to pay them, at least not in cash, to invest.
Yes.
Like maybe you have to buy them a coffee, but
Hopefully we're not having to pay them. Around the accredited investors piece, is there any sort of ratio for qualification as it relates to the size of the investment? So for example, an individual makes $200,000 a year, but the minimum investment size is $500,000. Is there any sort of ratio there that matters, or is it just, if they make $200K a year, they qualify?
Yeah, it is that they qualify. So,
okay.
and that's from the company's perspective. If there's a dealer involved and a dealer is doing some sort of suitability analysis, so say that you have a financial, broker who's helping you build your financial portfolio, they may be asking and they may be saying, you know what, that's too big of an investment given your income and the size of your overall investment portfolio. But from the company's perspective, as long as they meet that accredited investor test, good to go.
Okay. We have a question around crowdfunding. And for the startup crowdfunding exception, is the $2,500 or the $10,000 the total limit for the purchaser among all investments, or just for one particular investment?
Oh, just for one. Yeah,
okay.
Just for one. So in that one particular business.
Okay, perfect.
Yeah. So a person can make a bunch of $2,500 investments in different crowdfunding raises.
Okay. I think do you need an assessment from a securities lawyer if you are buying or selling a small business?
I would always say it's a good idea. So when you're selling, if you're looking to sell your business or you're looking to sell your shares of your business, you're trying to find a buyer, someone to take it over. You can't do that unless you fit within your buyer and you fit within a prospectus exemption. So private markets can't just be freely traded. You have to fit within the rules of an exemption. So the easiest way to fit is an accredited investor. So if you can find an accredited investor who's interested in buying your shares of your business, that's an exemption you can use. Yeah.
Okay. From an international perspective, can the ASC support Canadian SMEs working on international projects for foreign companies to co-raise and or facilitate the fundraising so that the Canadian SME can continue to work abroad?
Yeah, so again, just always think of this, you have to think of where you are and then where your investors are. So if you're selling into another market, you have to follow the securities laws of that jurisdiction. So say you have someone in France and someone in Texas, then you have to be sure that you're following the security laws of the jurisdiction you're also selling into. So that's one thing I would just say, don't play around with that. Like it really would be good to have a securities lawyer involved if you are looking at money that's coming in from other sources. You're looking at selling into the US, selling into Europe, just because your likelihood of getting it wrong is probably fairly high.
Okay.
Without having a little extra help.
I'm just going to give a couple moments here for any other questions to come into the chat, but can you just revisit the reselling for lack of a better way of putting it, in the secondary or the gray market of private shares, and some of the concerns and things to be aware of, both as a buyer and as the seller?
Yeah, so I mean, as a buyer, so if you're investing in you're buying shares from someone else rather than directly from the business, you don't have access, you may not have access to that same information, to the same sort of information that the first person did when they chose to invest. So they may not have a required disclosure document, but when you invested in a business, you probably asked a lot of questions. You did some due diligence. You know, what is management like? Do I feel like these are ethical people? What's the business plan? All kinds of questions that you're asking before you invest. When there's a secondary, so the first shareholder is selling to another shareholder, that second person may not be privy to that same amount of information. So that is something that, the business may well want to, they want to be aware of, because now all of a sudden they're having someone who they didn't know. So it's not their initial investor that they chose. It's a new person who's then now going to hold shares in their business. So they may be coming in and asking questions in the business, thinking, who is this? Who is this new person, kind of thing. As an investor, you want to be sure you are getting the information you need to make an informed investment decision.
Thank you. think this is probably the last one here. The Securities Commission makes and oversees the regulations. When and what investment vehicles to use and how to assess the options.
Doug, you froze, and so I didn't actually hear what that question was.
Oh, sorry. Am I better now?
Yeah.
Great. The Securities Commission makes and oversees the regulations. Navigating these is complicated. Any suggestions to SMEs where to go to get advice on when and what investment vehicles to use and how to assess these options?
Yeah, and it is that's the truth of it. It is complicated. It is, securities law is one of those things that is complicated. We do have some pretty good resources on our website. We have a section just that is specific on small business capital raising. So there is a lot of information there. Some of it is geared more toward lawyers so that they, someone who already is coming into it with a fairly good understanding. But we have been working on some more plain language information there as well. So our website is a good resource. The OSC also has a really, very plain language website where they have information as well if you're looking at investors from Ontario. My team is a resource. And then, of course, a securities lawyer. So, there's a number of firms in Alberta that do offer, kind of a program for businesses. So there's an application process where you go in and that firm is billing you at a significantly lower rate to help you kind of get off the ground and get things set up properly. So those programs are of huge value as well.
Yes, absolutely. Wonderful. Well, that is all the questions we have for today. Tonya, again, thank you so much for your time and sharing your expertise in this space. The comment section has been filled with just compliments on all the great information that came through. And I'm sure you're going to get a lot of phone calls of people wanting to go for coffee. So just appreciate your time today.
Yeah, I'm happy to do it. And again, there's no way you'll remember all this stuff, but you'll come away with some good info, and that we're here and we are a resource when you're at that stage of seeking investment capital.
Perfect. And on behalf of the capital development team at Alberta Innovates, stay tuned to watch your LinkedIn. We will be offering more of these webinars. This is an opportunity for us to all grow and expand our knowledge to help this great ecosystem of ours continue to thrive. Thanks, everyone. Have a wonderful day.